I still think it's on track to get to 2%. I mean, I don't know, who am I to tell you? You saw it. It was absolutely what we wanted it to be, that inflation is coming down. I've, again, based on research done by the Chicago Fed, I've been saying for some time that the argument that that we should look at wage growth as an indicator of where inflation was going, I thought got the dynamics wrong, that wages are stickier than prices. So the fact that wages were higher than they were before COVID did not leading indicate that wage inflation was going to stay higher. What happens is prices go up, then wages go up, then prices come down, then wages come down. And so in that dynamics view, the thing to watch are the prices. And take out food and energy, which drive my mom crazy. Why are you taking out food and energy? You know, that is, but you know why we'd take it out, because it's too variable. So if you got services, housing, and goods, we had 2% inflation. We actually had less than 2% inflation pre-COVID. And that wasn't from everything being 2% inflation. Goods were minus 1% inflation a year. Housing was about 3.5 or 4% inflation a year, and services were 2.5 to 3% a year. And that combination is how we were at around 2%. Goods are back to minus 1% inflation a year. They got over 12. So that was a comment, and I think a lot of that was supply chain problems. Services, I always say, you know, they're slower. We know they're slower to come down, but actually they've even started coming down. So in my mind, the key thing that we got to watch is housing. And it's got this mechanical component that the market rents are going to flow through, hopefully. And we've started to see that. But that, in the short run, of all the things that we're watching, that's probably the highlight of what I'm watching is if housing comes down to something like what it was pre-COVID, and some of the market rent variables show inflation growing even less than what it was before COVID, we would be on path to get to 2%. We would definitely be on path. And that can be derailed by external shocks, but the dark cloud, which for a long time was if you have job numbers like that, that means we're overheating and inflation can't come down. And we've heard for months the argument, it's stalling out at 3%, inflation is 3%. Some even saying the Fed should just surrender and declare, well, fine, 3% is good enough. I just don't get that. There's no evidence that we stalled at 3%. Look at the 1 month, 3 month, 6 month inflation. It didn't stall at 3% because it's working through in the way that we anticipated.